Gopal Mahadevan, the CF and the whole-time director at Ashok Leyland, now joining us here on the channel. Good morning. Let's just first begin with the monsoon. You have above normal rainfall. We have the recovery that we're talking about and hearing about so much across corporate India when it comes to the rural economy. What's your sense? You have a pulse on ground. You have a real sense of what's happening with the CVs as well. Give us your outlook and then we'll get into more specifics.
I think that CV industry is doing well, recovered quite smartly over the last few quarters, and that has been evidenced in the current quarter itself. The M&HCV volumes, the TIV had grown by about 160%. Ashok Leyland volumes, of course, had grown by 189% year on year. Well, we don't give an outlook of ours, but industry reports state that the growth could be anywhere between 15 to 18%. And that is very much achievable. If the current trend continues, if the COVID eases off, you are seeing the demand for M&HCV going up across sectors. If you look at tippers, multi-axle vehicles, ICVs, all of them are growing. Similarly, bus demand is growing, and that's a good thing because post-COVID there was almost a complete shutdown. And the volumes had come off quite sharply. But now we're seeing schools, colleges, institutions opening, intercity travel opening up. So that should augur well. And that we are a significant bus player in the country. So all of it, and if the semiconductor issue also kind of settles down over the next few quarters, we should see this kind of a growth.
Okay, so that's the outlook, and thank you for setting the picture for us. But getting into specifics, margins, they've come in below 4.5%, 4.4%. So it is at a multi-year low. Your earlier commentary has been about margin recovery and that they will get better. When is that going to happen? When are they going to normalize? What's your expectation? What is it that you want to tell your investors, your shareholders?
Well, let us see. The industry was, everybody was quite satisfied with the margins that we posted in Q4 and Q1 again. Despite high raw material prices, we have posted a 4.4% EBITDA. Things are going to look better with operating leverage coming in. Most importantly, steel prices are expected to soften. In fact, they have softened in the month of July onwards. So we are expecting the favorable impact of the softening of the steel prices coming in Q2, possibly in Q3 also. And we at Leyland, we rein in costs very, very sharply. So all of this should augur well with margins looking up as the year proceeds.
Right. So though the demand for CNG ICVs has reduced because of the cost gap narrowing versus diesel, you're looking to launch CNG version of LCVs by the end of FY23. What kind of growth are you expecting from the CNG segment in specific?
You see, CNG sales, functions on the arbitrage between CNG prices and diesel prices. So that arbitrage opportunity has come off quite a bit. But, these are all temporary phases. One can never say that suddenly you could have a differential which crops up very significantly. Then again, CNG sales can pick up. As far as Ashok Leyland is concerned, we have launched the CNG variant of E-Comet at the beginning of the current year, which is in January. We have a few more launches coming in, and we'll be having a full stable of CNG products ready during the course of this year. And our ICV, growth has been faster. So most certainly, you can look forward to new launches from Leyland on this.
Right. So your capex plan for FY23, what is it that you've outlined, and beyond that as well?
Nothing significantly different. We typically have 500 to 750 crores of capex, and that's exactly what we're looking at. Of course, we pay out the rope very, very carefully. This is, we would need to invest in, new variants, balancing equipment at the plants, so kind of, the overall number shouldn't go beyond the range that I talked about, unless we are looking at something very new or a new range of products, which we don't have anything to announce of
now. What about export growth? How's that got impacted because of Sri Lanka?
I think our export has done well, under the circumstances. So we have grown, I think, nearly 75% even in the current quarter. Last year, we actually did 11,000 units. The year before that, we had done only 8,000. So, so quarter on quarter now we are growing on exports. Sri Lankan market is a very important market for us, but, there are some challenges that the country is going through, which we hope, the country will recover. But we are focusing on the other markets as well, including Middle East and other countries in SAARC, as well as certain select countries in Africa. So we will continue to grow our exports in the current financial year as well.